Wow, this FTX story is insane. So how did this guy Sam Bankman-Fried obtain a net worth of over $25 billion by the time he became 30? And why was he the second largest campaign donor to the Democratic Party after George Soros in this past election? Well, first let me tell you how he became so rich in such a short amount of time. In 2017, he started two companies. One, FTX, a marketplace for crypto and exchange. Buy and sell crypto, he gets a fee. The other company he started was called Alameda, which was a market maker and acted as sort of a venture capitalist firm for crypto. And don't click off this video before the end because I have some crazy things to show you about who this guy is connected to and his family connections. First, let me show you this great explanation from Mark Moss on how these two companies interact.
Somebody that I know contacted him about a year ago and said, hey, what projects do you think need to be built on the Solana ecosystem? And he said, well, we could probably use this type of a project like that. So person I know contacted a couple developers on like Upwork, got them going to build out this protocol. And he said, if I build this out, Sam, will you list it on your exchange FTX so people can buy it? Sam says, well, if Alameda will make the market for it, then we will. Great, can you set up a meeting with Alameda? Yes, of course. The meeting is set with Alameda. The pitch goes out to Alameda, hey, we're gonna build this protocol to go on the Solana blockchain. We're going to create $100 million tokens, and if you make the market, they'll list it over here, people can sell. So Alameda says, okay, fine, here's the deal. 100 million tokens, give us 30 million of those tokens. We're going to give you $12 million for that. We'll take them at like a 3-cent valuation. We'll flip it to our venture capitalists at 6 cents and 9 cents. It'll go on FTX at whatever, 50 cents. And the person I know cashed out money in the bank on the sidelines. Alameda flipped those tokens. They kept a whole bunch of them. And here's the key piece. They made the market.
So you got that thing of it as like buying a stock. You go to get your company publicly listed, but the person who owns the NASDAQ is also a venture capitalist who buys your shares at a low price, sells it to the exchange that it also owns for a higher price, and then the exchange sells it for an even higher price while the venture capitalist still owns shares that are now worth much more than they paid for them. So that's why he had this two companies set up, because it was a way to double dip. But when it got really crazy is when the FTX launched its own crypto token called FTT. This is where things really exploded for this company. So on November 6th, just 1 week ago, an anonymous source leaked Alameda's balance sheet, and on its balance sheet it owned $15 billion worth of the FTT token. So on that same day, the CEO of the company Binance, goes by the name of CZ, tweeted that they were liquidating all of the FTT holdings they had remaining due to this balance sheet revelation. This caused a drastic sell-off of the FTT coin. And to make things worse, Alameda had borrowed money against the $15 billion of FTT they held. So this is where it gets really weird. The CEO of Alameda, her name is Caroline, she tweets to the CEO of Binance that they would be happy to buy its remaining FTT tokens at $22 a share, which basically told the world that $22 was the number at which they would begin getting margin called. So FTT got slammed with shorts and it basically went belly up. It went from $25 a token to just $1.50 a token in 1 week. So then Sam Bankman-Fried transfers $10 billion of customer money from the FTX exchange, money that people put into that exchange in return for crypto to hold in their account. He used $10 billion of that money to basically loan to and bail out his other company, Alameda. According to the Wall Street Journal, he reportedly transferred over half of the funds from FTX to Alameda, and then people were not able to withdraw their money from FTX. Days after that, FTX declared bankruptcy. Now let's look at some of these weird connections. Sam's mother runs a PAC, a political action committee, very left-leaning. Caroline's father worked at MIT with Gary Gensler, the SEC commissioner. Why was Sam the second largest donor to the Democratic Party in 2022? Why did Caroline send out a tweet that any rational business person would know would be bad for their company? Is there something larger at play here? I'm going to give an emphatic yes. And I'm also going to encourage you to check out the free trial I'm offering to my new free speech website at locals.com, the independent forum, for the full video, because I can't say everything on here. And the independent forum isn't just for stuff that I can't say. It's for a much larger political movement. All I'm asking for is a chance to earn your trust. I hope to see you there because this is a really interesting topic. The link for the free trial is pinned in the comment section. I hope to see you there.